Welcome to Energy Insights, the podcast where we explore the complexity of the energy transition and its far reaching impacts. I'm your host, Robert, and today's episode takes us deep into the real cost of Australia gas strategy, its long standing role as one of the world's largest LNG exporters, and the broader implications for Southeast Asia energy future. Australia has grown into second largest exporter of liquefied natural gas (LNG) globally, with exports dramatically rising by 365% since the year 2000. As LNG demands grow across Asia, Australia gas projects continue to expand. Yet, they are growing concern, especially with the environmental, social, and economic cost of continuing to push fossil fuels when clean energy alternatives are becoming cheaper and more viable. To help us explore this in depth, I'm joined today by Mia Watanabe, climate campaigner at Oil Change International, who has been at the forefront of advocating for cleaner, just, and sustainable energy policies, particularly in relation to fossil fuel investment in Asia. Mia, it's fantastic to have you on the show.
Thank you, Robert. I'm excited to be here and dive into this critical conversation.
All right. Let's kick things off by setting the stage. Australia has positioned itself as a central player in the global LNG market. In 2022 to 2023 alone, Japan was the largest buyer, importing over 36% of Australia LNG exports, followed by China and South Korea. Despite Japan and South Korea publicly committing to renewable energy expansion, they continue to invest heavily in Australia gas. So, here is what we actually like to discuss with you. What is driving this continued dependence on fossil fuel, especially when these countries are already seeing declining domestic demand for gas?
Great question. There are several layers to this. First, it's important to note that any expansion of fossil fuels is incompatible with the just, clean energy transition that we need. Buying and exporting LNG undermines both Australia and Asia's climate goals. So you might wonder, why then does Australia continue to export huge quantities of gas to other countries in Asia? Well, energy security is often the argument that governments make. Public finance from Japan and Korea has poured $20.5 billion US dollars into Australian LNG projects between 2008 and 2024, with Japan's export credit agency JBIC funding 64% of this total. Now, this strategy is to secure long-term access to LNG. But here's the catch. Demand for gas in the region is declining. Japan is actually buying more gas than it needs, and it's reselling it to other Asian countries for a profit. In fact, 29% of the LNG that Japan bought from Australia between 2023 and 2025 was resold to other countries. It creates this vicious cycle where LNG is basically maintained not for energy security, but for corporate profits and market control. Essentially, Japan is acting as a fossil fuel middleman while greenwashing its image and using its relationship with Australia to keep the gas flowing.
That's absolutely striking. The fact that a significant portion of gas export is resold rather than used domestically. But isn't this continuing to build a gas empire that benefits companies and government rather than the public?
Exactly. It's a gas empire driven by corporate interests. This empire isn't about energy security, it's about keeping the LNG industry alive, pushing gas infrastructure across the supply chain, and maintaining profits for stakeholders. The LNG supply chain, from extraction to transport, is incredibly capital intensive and requires long-term investment, which makes these projects deeply tied to public finance. As we see, JBIC and KEXIM are heavily involved in funding these projects. And it's this reliance on public money which limits investments in cleaner, more sustainable alternatives.
I see. Thanks for the insight, Mir. Now, let's dive further into the hidden costs of LNG expansion. Australia's LNG projects are notoriously environmentally damaging, with concerns ranging from methane venting and leakage to community displacement. Can you unpack these environmental and social risks and how they relate to the expansion of gas infrastructure?
Sure. Well, the environmental costs are significant. Let's start with methane. Methane venting and leakage throughout the gas supply chain is a major issue. Methane is 80 times more potent than CO2, or carbon dioxide, in terms of global warming potential over a 20-year period. Methane is a very volatile gas, which means that it's really hard to transport, and leaks across the supply chain are inevitable. The extraction and transport of LNG also requires intentional venting of large amounts of methane, which makes the life cycle emissions of LNG comparable to or even worse than coal in some cases. Then there's the social cost. Take the Verde Island passage in the Philippines, where an LNG plant backed by JBIC is threatening both marine biodiversity and the livelihoods of local communities. These frontline communities are often excluded from policy decisions and have no say in long-term impacts of these projects.
That's shocking, especially when considering how LNG infrastructure might be undermining the energy transition in Southeast Asia. How does this affect countries that are trying to decarbonize?
Well, LNG investments in Southeast Asia lock countries into decades of fossil fuel dependency and delay the transition to renewables. For example, Indonesia, despite having abundant renewable potential, is being pushed to expand its LNG infrastructure by Japanese and Korean finances. Renewables in the region are already becoming cheaper than gas. For instance, solar is now the cheapest form of electricity in the Philippines, but gas projects are crowding out investments in clean energy. The Asia Zero Emissions Community, also called AZEC, it's spearheaded by Japan and is greenwashing. It attempts to promote fossil fuels under the guise of decarbonisation. Of the 158 agreements under AZEC, 35% involve fossil fuel technologies, including LNG. So rather than accelerating decarbonisation, this initiative is actually perpetuating the use of fossil fuels, which goes against the spirit of the Paris Agreement and is undermining climate goals in the region.
Thank you, Mir, again. Those are very informative and very insightful. All right, looking at the larger picture, what are the practical ways to break free from this LNG dependency and shift Southeast Asia towards renewable energy?
The first and most urgent step is policy reform. Southeast Asian governments must adopt long-term renewable energy targets supported by investments in infrastructure that can accommodate clean energy, especially solar, wind, and storage solutions. Grid modernisation is also essential for integrating intermittent renewable sources and reducing our reliance on gas. Now, there's no shortage of public money for the just energy transition. It's just poorly distributed. Rich countries can free up trillions per year by redirecting funds from harmful parts of our economies, like fossil fuels, that are driving climate change and inequality. So instead of investing in climate-wrecking LNG, rich countries like Australia and Japan must use their funds to help the Asia region transition to renewable energy. Additionally, the region needs regional cooperation. Initiatives like the ASEAN Power Grid could help share renewable energy across borders, making the transition more economically efficient. The International Energy Agency, or the IEA, has made it clear that renewables should be prioritised as they reduce long-term energy costs and increase energy security. The region has the resources, it just needs to make the political and economic commitment.
Thank you, Mir. That sounds like a major opportunity for Southeast Asia to shift to cleaner, cheaper energy. But how can we get investors to align with these goals rather than pushing more LNG infrastructure?
Investors need to understand that the future of energy is green. The declining costs of renewables make them a much safer bet than long-term investments in LNG, which are increasingly vulnerable to climate risk. Investors should divest from fossil fuels and shift capital into renewable infrastructure, which is blended finance models can help lower the risk of these transitions. Governments too need to create clear policy signals, like feed-in tariffs for solar and wind, so that investors can see renewables as the most stable and profitable investment. Countries that align their energy policy with climate goals will ultimately provide higher returns in the long run.
I see. Mia, this has been an incredibly enlightening discussion. Before we wrap up, if there's one thing you like our listener to take away from today's conversation, what would it be?
The energy transition is a once in a lifetime opportunity to build a more equitable, sustainable future. But that can only happen if we stop investing in fossil fuels, like LNG, and shift that capital into renewable energy. Australia and its trading partners must face the facts. LNG is not a bridge to a cleaner future, it's a barrier. So we need bold, ambitious policy action, regional cooperation, and global finance to accelerate this transition. It's time to put people and planet first, not corporate profits.
Thank you again, Mia, for sharing your invaluable insights. And to our listeners, thank you for tuning in. If you found this episode meaningful, don't forget to like, share, and subscribe to Energy Tracker Asia for more discussion on the energy transition across the region. For deeper insights, campaign updates, and analysis, visit our website at energytracker.asia. Until next time, stay informed, stay engaged, and keep pushing for change.